Good morning from Los Angeles, beautiful Los Angeles. Look behind me. Isn't it beautiful? Well, welcome to Trading with Sergio, Wednesday edition. So for July, I'm going to do these live streams right around this time of the day. There's a lot that goes on YouTube, right? One of the important things is transparency as far as I'm concerned. A lot of people say, why are you doing this? Trust me, folks, I'm not doing this for clicks. What I'm doing it for is to pay it forward, to inform, to educate, and hopefully bring up a lot of folks up to speed in order for them to gain or achieve their own financial freedom. Okay? I am blessed. I'm thankful to be in a country like this, which has given me pretty much everything, right? Come here as an immigrant, go to school, do extremely well, go to Wall Street, do well, um, beautiful, family. And why not? I have nothing to prove to anyone, right? Because I do see these, on X. Oh, look at me. I made $1 million on this trade. I'm like, okay, great. Wonderful. For me, it's not a sprint, it's a marathon. I don't have anything to prove to anyone. But what I want to do is I want to share my wealth of experience of 30 years of being on Wall Street and now trading my own accounts. And what better way than doing it this way? So I'm going to do these live streams about a half hour, 45 minutes, go through positions, what I'm thinking, what I see, what stocks are on my watch list, what am I, you know, about to exit and enter. I'm an active trader. This is not financial or trading advice. What I do is not for everyone. It's risky. Do your own due diligence, even if you're going to tag along. And there's many ways you can tag along. I don't mind. The way it works is with full transparency. I post for the regular subscribers. I post my positions every Monday, Wednesday, and Friday on the community page of the YouTube channel. However, there is lag in there, meaning by the time I post something on Monday, on Tuesday, I may exit, I may enter new positions, and on Wednesday, when I post it, they may not be there. And if you're still in it, it may work out better for you, or your losses may be larger. So again, none of this is financial or trading advice. Number two, if you want to become more involved with the channel, you can choose to be a member. All you have to do is click join, become a member, and email me, sergio@sergioavedian.com. And I will send you my Telegram chat group link. There, you will get access to my trading live. As soon as I trade something or do something, I will post it. And at the end of the day, I post my open positions on that Telegram chat group as well, so they can keep track of what's going on in my life. And another thing the members get is, like today, for example, there is a members only live stream, probably about 4:30 or 5 p.m. Pacific. And on that one, it's a lot more one-on-one interaction, right? They get to ask me their personal account questions, but this, again, it's mostly for informing and educating. And they're learning. The group is pretty strong. We have some experienced traders. We have some newbies. We have some, people that are quiet. We have some people that are not quiet. And I like it. I like it a bit. And so, but I'm going to do these live streams at least for a month. Trading days, obviously. So Friday, markets are closed. As you guys know, 4th of July. Let's go into 4th of July with account equities or net liquidation values at all-time highs. That's the goal. If we do close today, the way things are at the moment, I'm going to be at a new equity all-time high, which is great, as you should. Why? Market's at an all-time high. If the market's at an all-time high and your account is not at an all-time high, equity-wise, because that's the only thing I pay attention to. I don't pay attention to anything else. I said this many times. My account's like a supermarket basket. I have many subjects, items in there. All I'm trying to do is put a beautiful meal together. One goes up, one goes down. Like today, one's getting killed, but it doesn't make a difference actually, because the rest of them are picking up the slack. So to me, the important thing is to size correctly, to manage risk correctly, to press when you need to press, to allocate correctly, right? Not go YOLO and HODL and all these things. I keep saying this, but I'm going to keep saying it because that's the only way you're going to be successful at trading. You should always also have an investing account, especially if you're younger than me. Dollar cost average into indexes such as SPY or Bitcoin or triple Qs or IWM, the Russell 2000, just dollar cost average. It's going to work wonders for you because there is active trading and there's passive investing or trading. Well, not trading, investing. Passive is you just dollar cost average into stocks. It doesn't have to be indexes. It could be stocks that you believe in long term, because long-term capital gains are treated much differently, meaning 1 year, 1 day. If the holding period is longer than 1 year, your tax rate's going to be massively different. So that's why I have two different accounts. I have a trading account and I have an investing account. In the investing account, I'm trying to stay long-term. I'll go through those positions as well with full transparency. And in the trading account, I'm a lot more aggressive. Why? Well, if your goal is to beat the benchmark, what is your benchmark? Everybody's is pretty much S&P 500. If S&P 500 goes up 10%, and in your trading account with higher tax rates, because those are all short-term capital gains as opposed to long-term capital gains, you need to produce. You need to produce at least 3x as far as I'm concerned. 3x would be the minimum that I would be looking for to beat the benchmarks. If you're not doing that, don't trade, because you're going to get nailed. By the taxes are going to eat at least a third of it. If you have gains, you have to figure it out that way. To me, my goal is to go 4 or 5x of the benchmark. Last year, I was successfully able to do so. This year, I'm on my way. So to me, those are the things that I try to preach. I try to make folks understand, especially the members group. I think they're getting the benefit out of it. They're learning quite a bit. They're adding tools to their toolbox, as I call it, and I think they're pretty happy about it. But I like teaching. I really do. And I'm not going to take all the knowledge and experience I accumulated over 30 years to the grave with me, right? Why not share it? Why not, teach a man how to fish, right? I am giving him the fish too, by the way. When I post a trade, some of them tag along, some of them don't. I have hot periods. I have cold periods as a trader. Last couple of months, or 6 weeks or so, pretty hot. Still have losers, but winners. As long as the winners, you let the winners run and take small losses on the losers, you're going to do just fine. So yeah. So, but the other thing I'm going to do with these live streams is I want to create some content, relevant content for the channel. And for that, I'm going to talk about a single topic. Yesterday, I talked about President Elon Musk potential, because he's pissed. He was pissed. You can go check that out on Trading with Sergio Tuesday edition. I agree with him. On that one, I agree with him. There are a lot of things I don't agree with Elon, but on that one, I 100% am in his camp. About this big, beautiful bill that just passed the Senate with the tiebreaker vote coming from J.D. Vance, right? Now it's in the House. Could it struggle in the House? I doubt it, because the Republicans do have the House as well. So, yeah, the big, beautiful bill is nothing full of pork. It's going to add to the 37 trillion national debt by about 5 trillion. And not immediately, obviously, but we're doing a good job adding to that deficit anyway. We love deficit spending. We're on crack. Washington is on crack, right? In our houses, we have our credit cards, plastic crack. In Washington, they have our money. That's their crack. And they, the total income of the Treasury, okay, is $5 trillion. That includes income taxes, corporate income taxes, capital gains taxes, all that stuff. Okay. The expenditures are $6.5 to $7 trillion. We've been doing this for a while now. This is not a Republican or a Democrat issue. Both sides are spenders. And Elon was like, what's happening? Why are we doing this? We're bankrupting our country, right? Well, we are. Country is going bankrupt. So he's pissed. He's going at it on Twitter with President Trump again. President Trump saying we should deport this guy. We should have Doge look into his subsidies. I'm like, what is going on? But Elon says if this passes the Senate and the House, the big beautiful bill, the next day he's going to establish the America Party. I'm in. I don't enjoy it. I don't enjoy my kids' future to be, mortgaged. Just don't. You guys got to balance the budget. I balance my budget at home. What's wrong with you, right? But, they're bought and sold. All politicians are. They're in the pockets of some lobbyists and corporations. But that was yesterday's topic. So today's topic is going to be, we all heard of the wealth gap. What is the wealth gap, right? People complain. Look, I'm a capitalist. Don't get me wrong. I'm not a socialist, not even close. However, I do understand the wealth gap. The wealth gap is growing immensely. The gap between the haves and the have-nots in this country is at the highest level it's ever been. And that demonstrates itself in our markets as well. The top 1% owns 90% of the assets in this country. And when I say assets, it's not just stocks, bonds, real estate, all that stuff, right? And they control the rents, they control all of that. And look, I'm a capitalist, but at some point, I think that's another reason I'm doing this, right? Because the bottom 50% doesn't own anything. Why not? Why do you all go to, buy a cup of latte at Starbucks for $7? Why don't you just put that money aside every week, invest? No. Well, they don't because they're not taught how to invest or what to do with that money. I mean, we teach our kids everything at school, at the elementary school level, middle school level. We teach them about sex. We teach them about, transgender issues. We teach them about all that stuff. What don't we teach? That goes, by the way, from elementary school all the way to the end of college. That's because when I say they, banks and credit card companies, and they just want to have a dependent society. Okay? They don't teach them. They don't teach them how to save. They don't teach them how to budget. They don't teach them anything. Well, that's another thing I started the channel for. So the wealth gap could be closed. The only way the wealth gap is going to be closing is educating folks to not go spend crack plastic cocaine that they have, get addicted to it. Save your money. And I'm not telling you go put it in a savings account. Although these days, even if you're in Robinhood, you get 4% APR on your cash, or any money market account, you get 4.25%. Is it keeping pace with inflation? Probably not, but better than nothing, better than when it was zero, right? So even at the minute level, where your money is sitting is important. Most people go put it in a savings account at the bank. Banks are still paying 0.3% for those. Why? Because they're borrowing the money from you and then lending it back to you at 10%. I mean, just these simple things should be mandatorily taught at the elementary school level, middle school level, high school level, and definitely college level, because college is a scam, completely overrated the last 15, 20 years. All these kids come out of with useless degrees with $100,000 and $200,000 debt, right? In what world? So we just like a dependent society. That's what we do. I'm against it. But let's look at some numbers. Here's the numbers. You want to talk about numbers? Here we are. U.S. household stock ownership. This is just stocks. We're not talking real estate. We're not talking commercial real estate. We're not talking bonds. Just talking stocks. Let's look at it. U.S. household stock ownership is extremely concentrated among the wealthy. No kidding. Listen to this, folks. The top 1% now own 51% of all stocks held by U.S. households. Let me read that again. The top 1% now own 51% of all stocks held by U.S. households. This has increased by 8 percentage points over the last 35 years. The next 9%, okay, now we're going to from 1 to 10. 1 plus 9 is 10. The next 9% on 36%, meaning the top 10% of households, and I sure goddamn hope if you're watching me, you're in that top 10%, or you're aspiring to get in that top 10%, meaning the top 10% of households own 87% of household equities. Get it? Now you guys understand why education is necessary? Okay. By comparison, this hit me hard. By comparison, the remaining 90% own just 13%, down from 20% in the 90s. You know why? Because of inflation, because of debasing of the currency, because of the toilet paper US dollar. Hey man, if you had a W-2, you're not keeping pace with any of that unless you have investments. They're forced to sell their investments actually since 1990s. Furthermore, and here's the opposite of the 1%. Furthermore, the bottom 50% of households owned a mere 1 single percent. The wealth divide is growing. Growing? The wealth divide is as large as it's ever been. Top 1% own 51% of all stocks. Top 10% own 87% of all equities. And the bottom 50% own a mere 1%. This needs to change. This must change. On the other hand, the US stock market has never been this large. Well, if you just DCA'd over the last 20 years, okay, you would be doing just fine. DCA meaning dollar cost average. The total US public equity market capitalization hit a record $63.8 trillion. Trillion, according to Goldman Sachs. That's double the size it was 5 years ago. We know what has happened, right? After COVID, zero interest rates, boom, to the skies, to the moon, and we're continuing. We're just making a new all-time high today. Why aren't people participating in it? Because they're broke, right? And they're not taught. Why can't everybody do this? So by comparison, previously, it took 8 years for that to double, 2012 to 2020. In the last 5 years, we doubled again. The US stock market is now more than 3 times larger than Europe's. And listen to this, folks. It's also now larger than combined market size of Europe, China, Hong Kong, Japan, and India. You guys get it? This is the place. This is the place to invest. This is the place where world comes to invest. We have the liquidity. Do we have the right monetary policy and fiscal policy? Absolutely not. But partly all this is happening due to monetary policy, right? When interest rates are zero, all that 1% can go borrow at zero. Can we go borrow at zero? No. What do? They go invest. You know, the top 1% is very happy not owning $1 worth of cash in their banks. What do regular folks do? They go put money in the bank. Why are you putting money in the bank? It's not going to work for you because every month, every year, you're losing 6-7% of the value of your buying power. Why are you even doing it? Go invest. I'm not telling you to go to Robinhood and swing 0 DTEs. Invest. So yeah, the divide is as large as it has ever been. And I don't think it's going to change unless people get educated. And I'm going to do my best. So for that sense, please go share. Please put a thumbs up. I think I have some valuable content on the channel for everyone. Again, I'm not in it for clicks. I'm really, really not in it. I do understand how YouTube works. It's a difficult world. Some of you may know me from YouTube, from other channel, but all I'm saying is I just want to pay it forward and teach you how to fish. So let's see who's here. Techie B, good afternoon, traveler. Vic K, Vic Macrobake. What happened to your membership, bro? You dumped us, man. I know you're like you're too conservative probably for the membership because we do trade actively, and you're not that type. But I get it. I understand. So let's get to this time. I'm gonna do it correctly. Let's get to my positions. Do it correctly. Here we go. I think you guys can see this. And here we are. Okay, what do we have? What's going on? Did a beautiful trade on AAPU. Today is Wednesday. I will post this on the community page. Obviously, the members get it at the end of the day. So everything highlighted is still an open position when I do post. So that's an open position. I trimmed the position literally. This is AAPU, which is the 2x ETF of Apple. I'm short 20 puts and long the 25 calls. I had 30 short puts and 60 long calls. I trimmed half at about 23.50 when AAPU got up there. I'm going to keep the rest as it is. That was profitable, and I'm going to let it run. Webull, I was short puts, finally closed all the puts with good profits. Stock is running. I was also long the calls. That was a synthetic. I was short the 12.5 puts and long the 15 calls. I sold the calls today with a tiny little bit of a loss, but then the puts made so much money that it didn't make a difference. The next two are strangles, short strangles on Circle and CoreWeave. What else? What is there to say? We're just, these are all July 18th expiration. Not a big position, but huge money maker actually over the last 10 days. So short strangle means you sell a call, you sell a put, and you hope that the stock stays in between those two prices. For Circle, I'm between 120, 140 short puts and 320, 330 short calls. I was short the 340s. I sold them at 35. Bought those back, obviously, rolled them down, but it's melting. The position is basically, all I have to do is now wait for theta decay. You guys please understand the Greeks. On CoreWeave, I have a short strangle. The body of it, or the numbers are 125 and 220. I put that on at close to 10. I rolled it started with the 260 calls. Now I'm down to the 220 calls. So just going to let them go to 0. Well, I will probably cover a little bit of time. Usually it's not suggested to keep short strangles to the last day because you're not going to gain that much more. But with 4th of July long weekend, I have 3-4 days. Probably middle of next week, I'll cover these. And if you guys come watch me, you'll see it happen. I'm short 25 fuel cell July 7 puts. Cost 135. It's about 160, 155. I'm willing to get assigned at 550, 560 range. I was short puts. I covered those. If you guys follow the community page, you guys will see the progression of all these positions. I'm long a call debit spread. I had done that as a synthetic when I shorted the puts, the 25 puts, the 22.5 puts, and the 20 puts. Stock bounced hard, covered those, bought those back with profits. Now I'm just letting the call debit spread go. Next one, this is the one that hurt me today, but overall it's not going to hurt me for the fact that we are I had trimmed it yesterday. I had 20 of those. I was short 20 puts, long 20 calls. These are August now, and short August 28 calls. I was down to 5. I should have probably cleaned the whole thing up, but I didn't get hit. This morning, there was Centene is in the same line of work. There's rumors that Medicaid to illegals is going to be cut off, and a lot of people will be losing their coverage. And I don't think Oscar is that involved in that business, but I added to the position with the same at 325 credit to the put side, 20 minus 325 is 1675. Am I willing to buy a few hundred shares at that level? Absolutely not. New position today, opened it on a 2-to-1 ratio. I'm shorting Rigetti, which is a quantum computing stock. I'm short 15 of the August 12 puts, and I'm long 30 of the August 15 calls. Stock is 1227. We'll see how that goes. Just opened it actually this morning. I am short. I'm short a lot of things. I keep saying short, right? I'm short actual shares now, not puts or calls. I'm short 200 shares of Sezzle. Actual shares. This is really not an equity efficient trade for me, but then I'm doing it because I'm expecting a pullback anyway. So that plus I like to have a balance in the account. I can't just be all long or all short. Sezzle is I shorted 200 shares. Average cost 177. Stock is 171. Up 6-7 points. I'll keep that. I had 70. I trimmed quite a bit. I'm only long 20. SMCI. August 60 calls, and I'm short 1,000 shares of SoFi with an average cost of 18.48. Stock is 17.97. But I'm also short 10 expiring tomorrow puts. So what happens if the stock is under 18? Those are $18 puts. If the stock is under 18, I took in 25 cents for those. Automatically will get assigned, and I close the short position, and that'll be like $1,000 trade in a couple of days. So no problem. I was long. I put debit spread. I took my loss there, got out. And a lot of these, it's meaningless. When I say meaningless, I mean I don't want to lose, obviously, but I have to have hedges because overnight risk in the markets are really, really large now. And I'm short 600 shares of TSSI Inc. shares, okay, with an average cost of $30.13. Stock is $27.80. But I'm also short July 18th expiration, 6 of the July 30 puts. So if I do get assigned, again, if the stock ends up here, I took in 3 and a 340 for those. All right, 13 minus 340, right? So I get assigned at 30, but I took in 340 for the premium. That premium will be mine if I get assigned. So that means 2640 range, 2660 range, but I'm short at 3010. So that's 3.5 points on 600 shares, couple $1,000. That's all we're trying to do. Couple here, couple there, new all-time equity highs. And last but not least, I added to this yesterday. I'm long 3,500 shares of WeRide, average cost 809, stock is 790. But I'm also short. I sold the covered calls against it July 10. So if it goes to 10, gets called away, great. If it doesn't, lower my cost basis. So those are the positions. A lot has actually transpired today. I did do a lot of trading today, and I will obviously do this and run through it with you folks every time I go live. And Rigetti is a beautiful chart. AAPU is a beautiful chart. I'm waiting for Baba to either break out or break down, but those are the positions, and that's what I'm intending to do. And keep you guys informed. So let's see who's here. Take a beat. You guys want to come on for a few minutes? You're more than welcome to. I'll put the link up. And here's the link. Here's the link if you guys want to come up. Take a beat. Hello. Traveler, what's up? Vic, hey. Macro Baked, yo, what's up, Macro Baked? How's your little baby? More debt at low, let's see. More debt at low rates, we need more. Spike the punch bowl, yep. Spike the punch bowl, keep printing, burr, burr, burr. If you guys want to grab the link and come on, you're more than welcome to. If not, I will go through some charts and say goodbye. These are the types of things I want to do on these live streams. Go through the positions. But let's go actually. Instead of just going through positions, let's look at some charts. Yeah, short and sweet. Here's the big charts. This is the SPX, new all-time high. SPY or SPX, same thing. What is there to say? I mean, market's at a new all-time high. That's it. Here's triple Qs, new all-time high or very close to it. Apple, that's why I did AAPU. Yeah, it got up to 200 EMA, a little resistance. I like this chart quite a bit. MACD is going through zero. I think this was the underperformer of the MAC 7. I think I'm definitely going to add back to what I sold on AAPU. AAPU is the 2X ETF of Apple. Like the chart. I think we can get up to 27.5. So that's why I do the synthetics. It's like a turbo chart. Instead of buying the shares, it's more equity efficient, actually, if you do a synthetic as opposed to buying the shares. Although you have time, obviously, considerations, but then you have to do it when you're expecting something to move fast within a month or two, let's say, as opposed to anything else. But these types of patterns are kind of breakout patterns, so that's that. Circle my strangles, just keep going, doing what it's doing. I mean, you guys can see the red lines here. There's a red line here. These are my short puts. These are my short calls. As long as it stays in this wide highway, those puts and calls are going to expire. But I will cover them at probably 90% gain. This is CoreWeave. And by the way, if I do get a sign circle at 140 minus the premiums I took in or 120, I own it. I want the shares because then it'll become a swing trade. This is CoreWeave. I'm short 125s and short 220s. Okay, if I get a sign to 125, great. Right on top of the 50 EMA, which is support. And I took in $10 for it anyway, so that's 115 for me. So no problem. GRRR. Yeah, I'll keep my call debit spread, which is going out to August. What else? Let's look at some of the shorts, actually. Sezzle. I like shorting things when they get this nosebleed levels. I'm expecting a decent pullback, actually, even in a pullback to 145, probably, to the 20 EMA. This is SoFi. People said, Serge, are you crazy? Why are you shorting SoFi? I go, why wouldn't I short SoFi? Stock is 18. I'm short the 18 puts. If it ends up at 18 or higher, puts expire worthless, I'll do it again. If not, I'll keep the shorts. I mean, yeah, it's a beautiful chart, but I think it's overextended, just like everything else is. And the other one I'm short is TSSI. There you go. I mean, why wouldn't I be short? I don't mind. Things go down 3 times as fast as they go up, as we know. A couple other things, all the other ones like Microsoft and Meta are all all-time highs, obviously. Palantir, and we'll look at Palantir and Tesla, and then I'll answer some questions and say goodbye. There's Palantir. It started to pull back a little bit, but still good support at 50 EMA. Robinhood, in its own world, amazing. Cracked $100 a share first time, obviously. Beautiful chart, extended. My members were asking, are we going to short Hood? No, not with your money. I mean, look, I like Hood a lot. I think they're doing great things. Will it pull back? Yeah, I'm pretty sure. That's why I'm short other things. It's long breakouts and short breakdowns. And this is a Rigetti we added today. 1233, beautiful chart. Volume is kind of lacking, but we need a little bit more volume. But I like these types of patterns: sideways, breakout. And if it breaks out, great. If it doesn't, we'll take care of it. That's it. What else? We ride. I'm accumulating. Traded it many times over the past 2.5 months. I like it at these prices. We ride is the Waymo of China, by the way, and they have a deal with NVIDIA and Uber. Expanding around the globe, not just China. If you guys have any questions, let me know. Oh, well, my long-term portfolio, I'm long 4 stocks. Google. I got lucky on this. I really did. On all of these, I got lucky. I bought Google about 143. It's 178, but I'm going to keep it. I'm long Nike. Nike, I got super lucky on. After not looking at it for 4 years, somebody said, look at Nike. I'm like, yeah, okay. I paid like 53.5 for it, and we're at 76, so we're going to keep that. I'm long Kava. Paid about 72, 73 range, and then it rallied to 100, pulled back all the way to 72 again. That's when I sold cash secure puts on my long-term investment account. Hopefully they'll expire worthless. If not, I'll get assigned. I'll have a full position. Last but not least, I'm long Unity Software, about 21. It's about 24. good companies, diversified companies. That's what I look for, and keep them. Hopefully a year and day. Excuse me. Okay, so that's it. Short and sweet. I like doing these. Wonderful to hear. Amazing. Yeah. Congrats. Start investing for her as well. Okay, Daddy. Google's looking good out of Max 7. Yeah, I think Google is probably Google. I think is probably the most undervalued Max 7. Although they may have issues with their search engine issues, right? Because AI may be replacing search engines. Be careful with that. But I think Waymo is not priced in at all. It's $1 trillion business, actually. Excuse me. And there you go. Good for you. All right, folks. If you have no more questions, I'm gonna leave. Go have some water because my allergies are raging this year for some reason. But after that, see you guys tomorrow. Trading with Sergio Thursday edition, and we'll go through the positions, and you guys will see. For the members today, probably 4:30 or 5 p.m. The members only. I expect all of you to show up. Show your faces. Peace out, man. You take care. Be safe. All right. See you folks tomorrow. Same time, 10 a.m. Pacific, 1 p.m. Eastern. If you have any questions, come back tomorrow. Ask me the questions. Please put a thumbs up. Please share. Subscribe if you're not subscribed. Turn on notifications so you get notified when I put content out or when I'm doing live streams. So become a member. Learn how to fish. That's about it. And much love. See you guys tomorrow.